What if you could turn $1,000 into $10,000, a 10x return? That's exactly what asymmetric investing is about. I'm doing research on stocks that could 10x over the next 10 years, and I've got one stock that I'm already up big on in the asymmetric portfolio, and I'm gonna buy more because the potential is so huge. But I think it's worth covering why asymmetric investing works. This leans into the advantages that we have over the market. Let's start with compounding. Analysts simply can't correctly predict compounding if it's going to happen over the course of many years or decades. Look at companies like Netflix or Amazon. They were always underpriced because they were compounding over decades, not just a few years, something that analysts just can't model. So when we lean into that compounding and lean into it for a long time frame, that gives us a huge advantage. That patience to wait years or potentially decades for massive returns, something that typical Wall Street analysts or investors aren't able to do. But if you can have that long-term vision, it gives you a leg up on the market. And the final thing I'm always looking for is disruption. I don't want to own companies that are being disrupted. I want to own companies that are on the offensive, doing the disruption. And oftentimes the market doesn't see that disruption coming until it's too late. So the stock that I'm going to talk about today is disrupting a $600 billion industry. And it is a tiny player with a market cap of just $7 billion. Stock I'm talking about is HIMSS and HERS. They are disrupting the pharmacy business. And I think this company has 10, 20, 30-year runway of massive growth, expecting 90% growth for the fourth quarter, which they're going to report very soon. So I'm going to get into their potential here. If you want to check out my deep dive on asymmetric investing, I'll put a link to that in the show notes. I started buying shares in May 2024. This is one of my biggest positions already, and I'm going to potentially be adding more when I make my February allocation, which will happen early next week. So I'll cover that on the asymmetric portfolio. You can sign up with that link in the show notes or the link on the screen. I'm going to be back with my analysis of HIMSS and HERS in just a second. All right, if you are serious about investing, you need to know about public.com. That's where you can invest in everything from stocks to options, bonds, and even crypto. They even offer some of the highest yields in the industry, like the bond accounts, 6% or higher yield that remains locked in even if the Fed cuts rates. What sets Public apart is how they give you the tools you need to make informed investment decisions. Like their built-in AI called Alpha, it doesn't just tell you if an asset is moving, it tells you why the asset is moving, so you can actually understand what's driving your portfolio's performance. Now, Public is a FINRA registered, SIPC insured, US-based company with customer support teams that actually care. The bottom line, your investments deserve a platform that takes them as seriously as you do. You can fund an account in 5 minutes or less at public.com/ASYM and get up to $10,000 when you transfer in an old portfolio. That's public.com/ASYM. This ad was paid for by Public Investing. Full disclosure is in the video description. One of the challenges in finding 10x stocks is that there's always uncertainty in the market. If you are able to answer every single question about what a company's future looks like, guess what? All of the growth and profitability is already priced in. So HIMSS and HERS has great fundamentals. You can see in this chart, they have a 95% compound annual growth rate since 2018. They are now profitable with $101 million in net income over the past year. But there's questions about the company's GLP-1 products. HIMSS and HERS is using basically a loophole to sell compounded GLP-1s because traditional branded GLP-1s are on shortage. So that provides uncertainty in the market. How much is HIMSS and HERS going to be able to grow in 2025? Are margins going to come down? Is net income going to come down? Investors don't like uncertainty. That uncertainty causes fear about the growth rate for HIMSS and HERS, and that's why the stock has been so volatile over the last few months. But that's also why there's opportunity. Because when you dig deeper into HIMSS and HERS, you don't just see a GLP-1 company, you see a company that is disrupting the pharmaceutical industry. I'd like to talk about HIMSS and HERS as more of a platform company than it is just a product company. If you're just looking at the products that they're selling, you're not seeing the full picture. This is a company trying to replace the doctor-patient and then the patient-pharmacy relationship with a more convenient platform. Basically, the digitization of healthcare. If you've spent any time waiting in line at a pharmacy recently, or you've had to plan or pay for doctor's visits, you know exactly the pain points that I'm talking about, and that is what HIMSS and HERS is trying to disrupt. Now, they've started at a very small point, starting with things like hair loss, ED treatments, and now moving into menopause on the HERS side of things. But this is really just the start. And the advantage is the company can now get to know you. They can offer personalized solutions. They can provide asymmetric checkups, meaning you can put in information about that checkup at any time, day or night. The doctor you're working with can respond anytime, day or night. That's something you can't do in a 9-to-5 doctor clinic. And as the number of products grows, the relationship that you have with HIMSS and HERS grows and gets deeper. That's why you see the growth in the company's members and an increase in the amount of money that each of those members is spending each month. Now think about this disruption and think about what HIMSS and HERS may look like 10 years, 20 years from now. Not what does it look like today. Not questions about what did GLP-1 sales look like in the first quarter or the second quarter. What does this platform look like 10 years from now when it has all of my health history and all of my information? And I can say, here's this challenge that I'm dealing with. I need an answer, and I need it at 2 a.m. on a Saturday. That's the fundamental disruption that HIMSS and HERS can have in the market. So why is this still a 10 bagger even after the massive run up since I started buying in May 2024? Well, we have a company with phenomenal growth. You can see that in their growth chart. This is the trailing 12-month numbers, and there's a lot of tailwinds behind this. They are expanding the product lineup. I just talked about expanding into menopause products for women. That's going to happen in 2025. They're also going to introduce more AI solutions with their MedMatch. So they're increasing that product lineup, which allows them to serve more solutions to customers. That's increasing the number of users they have and increasing the revenue per user. The great thing for HIMSS and HERS is this is something that incumbents just can't respond to. And this often happens in the digital space when internet native companies are built. They're coming from a disruptive angle that incumbents just simply don't understand. Yes, Eli Lilly has a direct sales channel that customers can buy their products, but they don't have the same breadth of solutions that HIMSS and HERS does. Their website, frankly, looks terrible compared to HIMSS and HERS. They're just not built to be a digital company. And this is why incumbents can be disrupted in the first place. On top of that, this is something that's always misunderstood about multi-baggers. You have to get in at the right price. And HIMSS and HERS has had a phenomenal run recently, but the price is still relatively reasonable. As I'm recording, the enterprise value to sales multiple is just 5.4. On a forward basis, it's just 3.4. That's because the company is growing at such an astounding rate. So there's that compounding that I talked about earlier. If you're able to compound at 50, 60, 90% like HIMSS and HERS has, that's how you get phenomenal returns for investors. Now, of course, multi-bagger stocks like this aren't without risks. And not every stock that I buy in the asymmetric portfolio is going to 10x in value. But when you stack the odds in your favor, like I think you're doing with HIMSS and HERS, buying in massive markets, buying companies that are compounding their revenue and their earnings and free cash flow, over-indexing on founders who fundamentally understand their point of disruption in the market, and you pay a fair price, that is how you crush the market long term. That's why the asymmetric portfolio is up over 50% in the past year and is more than doubling the performance of the S&P 500. So if you want to join that community, find out the 20 plus stocks I have in the asymmetric portfolio, I'll leave a link to that in the show notes to both the portfolio and then also the HIMSS and HERS deep dive that I did. You can start on asymmetric investing for free, just like you can here on YouTube. And then there's a premium version as well. I'd love to have you in that community, whether that's on the newsletter or whether that's the membership version here on YouTube, covering a lot of phenomenal stocks like HIMSS and HERS. This is one that I think is still underappreciated, gets a lot of attention for GLP-1s, but there's a lot more to the business than GLP-1s for HIMSS and HERS. That personalization, phenomenal growth rate, and a reasonable price. That's why there's still 10x opportunity over the next decade. But let me know what you think of HIMSS and HERS. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.